The Federal Reserve has now loaned out money to banks and other financial institutions at a rate of more than $130 billion a day. The total outlay, more than $2 trillion. But no one knows who received the funds, what conditions were placed on those loans, and the likelihood Americans will ever see that taxpayer money again.
I cannot imagine anything that is more obvious, more common sense. How can you put $2.2 trillion of taxpayer money at risk and not know who is receiving that money?
Senator Bernie Sanders co-sponsored an amendment to the congressional budget resolution that calls on the Fed to disclose the loan recipients and what they put up for collateral. The proposal passed 59 to 39, 20 Republicans and 19 Democrats voting against it. The amendment was part of a non-binding budget resolution, but it's meant to send a message to the Fed and the financial services industry, which has resisted calls for disclosure. Here's why.
If the average depositor sees that their institution, if their bank is borrowing from the Fed, they might draw the incorrect conclusion that their bank is weak and therefore pull their deposits out.
The Federal Reserve typically decides on monetary policy behind closed doors, but a government watchdog group says what's going on now needs to be out in the open.
One of the stated goals of the bailout is to increase public and investor confidence, but by withholding just some of the most basic information about who's getting these emergency loans, the Fed is actually undermining its own goal.
A separate Senate amendment called on the Federal Reserve not to disclose the names of the banks, but at least to release the terms. That amendment passed 96 to 2. But even with that overwhelming but non-binding vote, the Federal Reserve has still declined to release any information. Lisa Sylvester, CNN, Washington.